Hello and welcome to the next episode of When Tomorrow Comes. So unfortunately, you're stuck with me again, Charlotte Orrell from the Futures team, as we take on the big one, property market trends for the year to come. So joining me today to look into their crystal balls are my colleague Matt Kingham from our economics team. Hello, Matt.
Hiya.
I'm also joined by Nick Grant from our planning team. Hello, Nick.
Morning, Charlotte.
And in addition to our Iceni contingency, we're lucky enough to be joined by some of the brightest sparks in the industry from Levy Real Estate. So Levy is a leading property consultancy, cutting edge knowledge and expertise in office, industrial, retail, leisure, and the residential markets. So from Levy, I'm pleased to welcome Simon Higgins, managing partner, who takes a particular interest in commercial markets and specifically industrial. Hi, Simon.
Hi, guys.
I'm also joined by Will Grant, a partner and development advisor in the residential development and investment team. Hello, Will.
Hi, Iceni. Thanks for having us.
And finally, and not least, Matt Paulson Ellis, head of the firm's retail leasing and capital markets team. Hello, Matt.
Good morning, Charlotte. How are you?
Morning. So Matt Kingham, in the normal fashion, would you like to kick off discussions giving a brief summary of your article this week and some of your predictions you've made for the year to come?
Thanks, Charlotte. Yeah, I had the task of squeezing the full spectrum of property market forecasting in for 2021 and beyond across all the markets. So I'll give a 2-minute canter through that, and then we'll get some of the sort of London-focused perspective from Levy colleagues. I mean, 2020, of course, was a year like no other in almost every respect of that. And you know, we've seen a recession that is compared now to kind of wartime performance of the economy. It's very mixed performance and outlook from the different sort of sectors of the market for property. Housing, with the Chancellor intervened pretty early on with the stamp duty holiday, and that has had a massive positive effect on the housing market. And we finished 2020 at the highest national house prices on record, and that's going to carry on now until the spring. But and there are discussions about the extension there. But I think with typically the housing market's tied to the underlying performance of the economy. So with very high levels of uncertainty, we're thinking we're going to be kind of flatlining pretty much for the next couple of years, although there's a serious variation in perspective. So it'd be great to get Levy's view on that, and particularly in London, which, you know, have the capital done so well in recent years, there's perhaps more uncertainty in some areas due to people kind of a slow, perhaps steady out migration, is my current reading. I guess the other end of the spectrum, we've had the kind of logistics and industrial market, which has been really driven by e-commerce demand, and vacancies remain at the national level pretty much at an all-time low. There a little bit of mixed messaging with some of the tackling of the sort of Brexit headwinds and how that might be affecting the smaller manufacturers, and some balancing between that and the distribution demand. I think then we've got the kind of retail and office sectors, both of which have had relatively difficult times through 2020, and the outlook remains rather uncertain, particularly perhaps for offices. I mean, since we can't actually use any non-essential stores or offices, and we won't be, you know, probably for a couple of months. For retailers, the high street's been hit hard. We expect there'll be a bounce back once we're all allowed out and about, but the high street probably won't look as it ever did, I think, previously. And then finally, for offices, you know, I think from those of us who are forced to work at home previously in offices, I think mostly we're looking forward to going back in some shape or form. And, you know, there will be a steady demand, but whether that looks like anything it was over recent years, whether we're looking at a transformation office is a real deep question. I think that a lot of us that try and think about 5 to 10 year kind of outlooks are really wrestling with. So that's my 2 minutes, the sound bites. I mean, perhaps, Simon, it would be interesting to start with, how things have been in the commercial sector in London over the last year, and what platform you think that's giving us for the next year or two ahead.
Yeah, sure. I mean, I'll let me just cover off the sort of urban logistics space first, probably first of all, because there's much talk about urban logistics. It's definitely the big growth area where where there's an awful lot of investment money being poured into the logistics sector in London. That is mainly charged off rental growth and occupational demand. So right across the London area, occupational demand has perhaps never been greater in logistics. Some of our clients have been reporting last year that their occupational situation has never been better, and their number of leases they've got over the line in Q sort of 2 and 3 last year was greater than in years past. So, and that's really feeding through to the rental levels that are being achieved right across the capital. And it's mainly in the sort of chimney pot area. So that really feeds into the sort of retail arena where e-commerce, I mean, we all know how many parcels we're having being delivered to our homes. So that's really picked up. But I think the one area that's really charging the rents across London is the food delivery. I mean, the greengrocers of old and all the sort of upmarket food delivery businesses, on top of the more traditional food delivery companies of the supermarkets, the Ocados and Sainsbury's of this world. So all of those combined have meant that rents have been going through the roof right across the capital in certain, certainly in where there's a high population, which has meant that occupation has gone up, rents are still on the uplift, investor demand is seen as a very attractive sector to plough money into. And therefore, a lot of the big investment houses are starting to focus on London, and there's more and more coming into the market as we speak. You look in the press, there's there's more and more urban logistic funds being set up to pour money into the capital.
Simon, are there any specific qualities those investors are looking for in terms of their logistics space? Has that changed over the past year in the sort of spaces that they're looking for and that they need to provide?
I suppose logistics space falls into 3 categories. There's the small multi-let units, the little tiddlers, sort of between 1,000 and 5,000 square feet, that are being taken up by the either the food dark kitchen space or the food delivery companies. And then there's the slightly larger logistics, what you would look at a logistics building, the sort of 8, 10 meter, 12 meter eaves height buildings, where the likes of Ocado or DPD or DHL or those businesses are looking to identify new locations across the capital where they can then feed into the satellite smaller units. So I would say there's an investor looking for every sort of commodity, whether it's a small unit scheme or a larger single let opportunity or development. And I think that's something that definitely Will Grant will want to talk about, is where land values have shot up in London for industrial, and now they're hitting the sort of £6 million mark in certain parts of London. I wouldn't say every industrial site has got a value of £6 million per acre, but quite a few, definitely. There's plenty of examples now where that's being achieved. And so there's very much a situation where some residential sites that were being taken from industrial companies are now starting to look like they might have as good a value or a better value as industrial. And I think the planners are probably struggling to cope with that situation because they no longer know which route that a site is going to take.
Yeah, I mean,
a very specific example. Sorry, Rod, I think Nick's also got a very specific example of that in planning terms. Will, sorry, do you continue?
yeah, no, just on that point, I mean, yes, Simon's exactly right. We saw Amazon buy a big shed up in North London midway through last year, which took a lot of people by surprise. Not surprisingly, I think the affordable housing provision on that site was 43%. So 43% of that scheme was probably not making any profit. So I think viability for residential developments is under pressure like it's never been before. You know, we're not really. Matt did talk about house price growth across last year being very high. You know, sort of 8% across the UK. Actually, in London and London new homes, there isn't much house price growth at all, and that gets worse the closer you get into central London. You know, build costs are going in the wrong direction. It's getting harder and harder. We're hearing about potential developer levies to pay for the cladding scandal. You know, everything in the development appraisal for residential land is under pressure, but that's balanced against obviously massive housing need. And I think these stories everyone's hearing about people moving out of London to the countryside are a bit overplayed, really. Fundamentally, we don't really have the stock for people to move, and I think that's a short-term thing because all the things which make a city in London very exciting are closed, and you know, they will be reopening soon. But that's really hit the confidence in the build-to-rent market. So you know, rents in inner London have probably fallen 15% in a year. You know, that's a combination of, you know, foreign workers going back home, Airbnbs coming onto the longer stay market, basic demand and supply, which has probably knocked quite a bit of confidence in that wave of build to rent money, which is coming into London. But I think, you know, long term, that's not going anywhere. And you're seeing other forms of build to rent like co-living, which I'm everyone knows a bit of a big fan of that. And I think that won't go away. And I think that's going to become more and more professionalized. So yeah, we're not making enough housing. So that's the one thing which is keeping us going.
Matt P, I don't know whether you want to pick up on some of the retail points that our Matt was first speaking about earlier, obviously directly linked to the logistics space and what the high street has adapted to this year and what it looks like going forward. And obviously with Class E coming into play and the desire for the high street spaces to be market driven, what if you think that's going to have a realistic impact going forward?
I do actually. I think the Class E potential changes, I've read quite a lot recently that they think it's a bad thing for the high street. I'm personally a very, 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 very big fan of it. I think we have to accept that the traditional high street probably is dead, and to activate and support those retailers that are still there and still being successful, I think you need to have alternative uses, be that a gym, be that, if necessary, an office. And likewise, same with it being a restaurant as well. I think if you have lots of things that draw people in, I think you can have a very, very successful high street, which is very vibrant. People are there, people are working there, people are going to the gym there, people are going to restaurants there. And I think that leads to a vibrant hub. And I think that is the future of the high street. And I think that is how it will survive. If we don't do that, and sort of there is fight back from planners, you will just continue to see these shops just shutting, and you'll see more and more vacant units. And I look at, you look at the London suburbs at the moment, they're trading their socks off because largely lots of people are there, and it is a bit of a model of how to be successful. And bear in mind, a lot of the shops are closed, but you look at someone like Gale's Bakery, their top performing sites are, something like Dulwich, something like Belsize Park, something like Barnes. It's very much a model of how these locations, you could footprint it and sort of how to improve it across.
Isn't it the case, Matt? Isn't it the case, Matt, that the high street and the sort of artesian, your bakers, your fishmongers, your butchers, your coffee shops, the sort of businesses that you can't actually, the next day delivery from a warehouse unit, I know it's possible, and you can of course get a piece of salmon from a next day delivery, but the high street is going to look very different in some of those areas, isn't it? Because it's going to attract much more of that sort of slightly old-fashioned, traders, really. And in combined with that, obviously you've got
and I think Simon's right. I think you will get convenience retail, but I think you'll also get the more artisan things, and they will be more and more successful, especially if you look at some of these high streets. If people are working in the future 1 or 2 days a week from home, that's an increase of 20 to 40% in terms of their potential turnover, because people still want to pop out and go and get a coffee in the morning. They're not doing it on their way into work, but they will do it locally, and that will sort of drive and help the high street survive. I think one other thing is sort of just touching on with the Class E thing is, I think whilst I personally view it as very positive, I think some people need, the sort of planners in particular, need to get on board, because I've had an issue recently where it was a retail unit, it was a failed sort of printing shop, which, let's be honest, is no longer really that relevant. We're turning it into a restaurant, but it has taken us a year to get planning consent for the extraction duct. And we've had to jump through so many hurdles and hoops and reports. And I mean, frankly, sort of at wit's end. I think, sadly, we've had to go through 2 planning consultants to finally get the approval. And I think people need to realise that actually these things are positive. They will bring people to the area, and that process needs to be sped up, because otherwise the high street is going to be in trouble.
Matt, I mean, a point that I find you touched on, our local centres. We've all been to our local centres, and it almost seems like business as usual some days, but kind of bringing it back to central London. I mean, take examples, Oxford Street. How is Oxford Street going to recover? And I thought it was quite interesting, some of the things Simon was touching on, this logistics, distribution, how that might start to impact on central London. I mean, I senior advised on a well-known trainer brand on Oxford Street, and they were exploring opportunities to sort of have a last mile trainer distribution. You could order online, they'd go into the shop, then some guy would go out on a bike and deliver to zone 1 to 3. Is Oxford Street going to turn into almost showrooms, which are almost little distribution hubs? If people want to go in, we've seen it a little bit. There's some ideas about it over in the Royal Docks. There was a few of those ideas coming forward, but do you think that could be something that Oxford Street could see?
I do, actually. I think fundamentally Oxford Street will survive. I think people talking about the death of Oxford Street, Regent Street, Bond Street. Look, if you go up there at the moment, it's horrendous. There's no one there, there's no footfall, and it looks terrible, and it's very, very sad and quite depressing to look at. But fundamentally, people, especially in the UK, they seem to love going shopping. And I think what you will find is it is experience led. I think you will, perhaps the days of the giant department stores, I can see very easily a time where on Oxford Street there is just a John Lewis and there's just Selfridges, and that would be the department store sort of mix. And that's changed. And I think you will see more things like Market Hall, which who took over the first floor of the old BHS. And I think you'll see far more of that. You'll see brands like Flight Club, Whistle Punks, the experience led sort of very fun, active, sort of brings people to the area. And I think it will be a mix of traditional restaurants, traditional high street, the shops, and also these sort of the more leisure brands. But I think, Nick, going back to your point on the last mile logistics, I think there are a lot of basements. There are also a lot of car parks in the area. And I think there is a distinct possibility of those being transformed into sort of last mile logistics hubs. And I think an example of that, if you look at something like Cavendish Square, which is now being turned into retail and sort of healthcare, I think had it been put on the market now, I suspect it would have been snapped up by the last mile logistics guys very, very, very quickly, and they would have paid probably considerably more than the sort of lease that was granted originally. So I think you will see continual involvement there, and I think all those landlords are just looking at it. But I think it will come back. The people there, it still has, and it will eventually have Crossrail. There are big benefits to Oxford Street, and it will return. It will just return in a slightly different, possibly more exciting format, because gone are the days of trudging up and down massive department stores all day. You probably want to do a bit of shopping, go to restaurants, go and do something fun with either your family or your friends, and it's sort of the whole day out thing.
I think you're gonna. Sorry, go Simon.
I think people are a bit scared that they suddenly think there's never going to be anyone ever again in Oxford Street or Regent Street or any of those areas of London. I mean, frankly, as soon as we can get back into the office, it will be supercharged, won't it? Because everyone will be flooding back into town to get a change of scene. And I think employers there'll be a definite change of attitude to the balance of working from home and working in the office. But I would say that there will be a likely the balance will be still lent towards being in the office for communication and collaborative reasons. And actually, I can see that only being of a benefit in some ways to central London, because it's been overcrowded. The transport network's been overcrowded. And I think a slight readdress of the population that's rolling into London every day might actually make it a much better, nicer place and environment to work, live, eat, shop, and everything else. So there will be some positives that come out of it, I think.
And that environment point is really a good one, and there's a good example. And I think we really need the councils to kind of really be on board with all of this to help promote it. And I thought quite a good example is Soho, and how it was really a pleasant surprise to see Westminster pedestrianise that, and I only went a few times when it was like that, but it was fantastic. I mean, the atmosphere was I've never seen it like that. Every street in Soho pedestrianised. So is it? I'm sure it will come out at some point. But Oxford Street, does that need to happen on Oxford Street? We all know the issues with making it happen. But something like that, it's a real step change in that environment in central London.
On the Oxford Street question, personally, I think there's very little argument against the pedestrianisation. I appreciate there's a bus route and huge number of buses, but those buses just sort of sit there, they don't move, they pump out pollution, and they slightly ruin the environment, not only the shopping environment and sort of aesthetic environment, they're not great for the sort of global environment as well. And I think the time has come probably, and you can see it already on Regent Street with the Crown, the way they've widened the pedestrian, they've almost pedestrianised. It's now single lane traffic both ways rather than 4 lanes of traffic going up and down. And I think that is the starting point to it being massively reduced. And look, you obviously need logistics companies to be able to come in to resupply stores in the morning, but I think there is certainly a case for perhaps in the afternoons or early evenings where actually it is pedestrianised when most people are sort of walking around. And I think it would only benefit the city more and more, basically.
And I'm conscious of time, guys, so I'm going to give you one last question. Down a slightly different route, but what you've already started touching on. Sustainability seems to be sort of the centre of many conversations at the moment for the year ahead. I'm just interested to know the role of sustainability, net carbon. Is there a sector that you're thinking of taking up the reins more than others in terms of this, and how much is it influencing investment decisions going forward?
I mean, I'll quickly touch on that from a logistics point of view, because obviously there's low emissions zones are being brought in to London, and obviously all the logistics companies are trying to get their heads around electric vehicles and how that works with their network of distribution hubs. So there's certainly that's food for thought, and they're all fully on board with making sure they have the right locations dotted throughout the capital, but there's still quite a lot more work to do on that. So, the next surge of interest could be from more companies addressing that side of things.
Yeah, I mean, on the housing side of things, are consumers paying more for a particularly green designed housing scheme? The evidence isn't really there yet, but obviously there's a lot of regulatory pressure to build sustainable homes. I mean, it is featuring more and more in the marketing of homes. I think Berkeley Homes, kind of, one of London's biggest developers, I think their best-selling scheme is in West London at the moment in Ealing, and it's called the Green Quarter, and they play big on that. So it is slowly filtering in, and I think as a younger sort of buyers become more and more prevalent in the market, that will have an impact. But and I suppose with the build to rent sector, I mean, the investors in build to rent are a lot more attuned to it. Yeah, I mean, they're still struggling from a lack of stock, to be honest.
Great, thank you. I'm conscious I've kept you over time already. So thank you for the insights. That's been really interesting, really helpful, and the back and forth between the different asset classes and the interconnections. Yeah, interesting one to delve into. I feel like you could talk about it for hours, to be perfectly honest right now. And it'd be interesting in a year to come, with the year that we're about to have, to see sort of tick off whether we were right. I know most people I've spoken to when we did this, sort of beginning of 2020, is saying, please don't play back the recording, which obviously is a slightly different situation. But yeah, I just wanted to say thank you, Simon, Will and Matt, for joining us. Appreciate you taking time out today. And then, of course, Matt Kingham, Nick Grant, thank you also. The Iceni contingency. Finally, thanks to those who are listening. Thank you for checking in, and we hope you join us again next week for our next episode. Thanks, everyone.
Cheers, guys. Thanks a lot.
Cheers, guys.
Thanks.